Good morning, everybody. So market moving up on inflation news. I saw the numbers. I guess they were better than anticipated, but better than terrible, I suppose. In any event, I was chatting with Dan before, and I said, there's nothing good about this market. This is what I believe, extremely highly leveraged institutions that I guess are forced to react to everything that could maybe put them out of business. Whereas, in the past, you wouldn't have moves quite as extreme as this from day to day. But that said, it held the level that it needed to. Yesterday, we spoke about this 440 level being an important level. And before that was this 444, 445 last week that needed to hold between there and 450, where it bounced back and forth and back and forth. So, yesterday, as it started to inch down and then continued late in the latter part of the day when it couldn't rally, just kind of peekabooed under there and, regained it. And now this news comes out, and here we back are, as you can see, to 445. So day to day, just looking at the pattern, we had this strong move. We had to pull back to about where we would anticipate it, regardless of this open interest scenario with the leveraged option traders, big open interest. And now we'll see where this is in a half hour. Right now, it's gapping up to the top of this red bar, which is positive, on a day-to-day basis, gapping to the high or even slightly above. If it opens up there, a red bar, whether we're looking at buy setup, sell setup, support, resistance, whatever, it's like, well, what's to the left? And that's the systematic process. And so what we see is there's a whole bunch of congestion right there directly to the left to deal with. And so forth, which is, this chunk of information right there was right 440. No, it's up here. Let me put my crosshairs on here. I lose track of stuff. Yeah. It's right in there. You see the crosshairs going over each day. So it's up above here for now. It's got room. Could it actually get up there? Because I'm looking at this. No one. 440. I got skewed here looking at these charts. Good morning, McGraw. Right at the bottom. So there's a little unfilled gap right here. Maybe get a little further into this area. But it is stalled, as you can see right here at 445. It's right up here in this congestion. Maybe gets a little bit higher. So now we have to put this in the context of, right, the big picture. What we call them. What is the big picture? Well, the big picture is ugly. And so, day to day versus big picture. Down, comes down to the support, number we talked about here yesterday, and now it bounces back up. So now what should happen is, right, well, it either can gap and crap, right? What creates my thoughts is historic patterns and looking at something like this and thinking about what kind of bar would happen here. And I think it would be unusual to create something like this. I think that would be a little odd, for a big red bar like that. Should something like that happen, it's going to be nasty as hell tomorrow, because who's ever covering a short position now, they're going to put it right back on again if something like that was to happen. So now it's up to sellers that recognize what's going on here. Is it high enough to sell more aggressively or not, or, let it go sideways a bit and then see how it unfolds. So it'll be that way first thing in the morning here. And you can see that, that shoot up has created a void, which prices could just collapse right back underneath it. And let me just spread this out a little bit. That's overnight data. Anyway, so with this kind of pattern, which overnight has this downside shakeout and consolidation, other than the low volume, it's really a textbook type of downside shakeout pattern. And then it spikes up to resistance. And now we just start the process of, okay, what can you do as far as holding on to this gain, or does it just collapse right back down again, or somewhere in the middle, which is kind of what we do is, okay, just kind of arbitrary area, a 442, about thereabouts, if in the middle of the red bar, since it's gapping up here, and does it jiggle around there, and we'll assess how much they can, create a new support area. 44.35, talking SPX here, 44.35. Well, so, with SPX 44.35, yesterday's low was 44.08. So 44.35, 44.35, 44.40. That's the middle of the red bar, which is just, we're saying, okay. And so where does that actually line up? So S&Ps, based on where spiders are going to be, based on where they are right now, would be gapping about here. So just looking at technical analysis 101, what was resistance becomes support, and this 440 area, right? Options activity that clustered in that area, but gapping above here, coming back down would hold where this was getting rejected yesterday. So every time it tried to rally yesterday, it got rejected. And then the coffin nail was this little blip, which on an intraday chart would have been a little breakout that failed, and then it got crushed. And who's not going to hit the bid when you've got traders, even though this is down, trading a little counter trend move that's short-term extended. And so at the end of the day, it didn't happen. Get out. Tomorrow's another day. And then you get this nasty day. Who's short overnight? This news comes out. Everybody's leveraged. You get an overreaction within, this nasty move. And look, we cannot discount even, day-to-day trading. Yeah, we got to play our hand that's dealt with us. But, if you're short and you're share sized for, you got to get out, Or 5-minute high, 30-minute high. If you're share sized up here, you got breathing room. That's the way it is. This is extended to the downside, right? We knew that coming into, the day. It's still bearish. It would take, a miracle, and who knows what, promised the next 5 kids to whoever to get this thing to rally back up to the highs. So this is really, really negative. We looked at yield curves. It's really, really negative. And so my explanation here today is just putting this bullish gap against a negative day yesterday in the context of bearish market environment at the moment that is pointing to a recession. And we know historically, when that comes, as bad as things look like now, they're going to look worse. Right? And we don't have to look any further than, darlings like that are getting sold, like NVIDIA. Right? They'll come back for this. And it's on support, so it'll have its technical bounce, and the transports are on some support, and it'll have its technical bounce. And the Q's here basically in the middle of nowhere, but they got up close to 348, right, gapping above a red bar. You go back, I don't know how many years, but look, as long as I've been doing this kind of pattern, while it happens here and there, normally it would have been like waterfall down here, crushing, move to the downside. It's kind of a different world. And now we'll just see how this shapes up. But so 348, 50 MA over there, congestion, a wall of resistance at 350, a whole number. I look at this as sell the rally. I know. But how do you sell the rally in a situation like this? Well, especially whatever the pattern is, but on a 5-minute chart, I respect that move. So what I require is a retest. Buyers are going to be there on the dip. That's my expectation. Then a retest and some kind of choppy price action. That is when you get on board to do it. So we'll see how it plays out, or, does it just hang up here today? All right, so buy a dip, wait for some pattern to form here up at the highs to see if it rolls back over. Look at call spreads. All right, look at, Dan will go over gappers and what's up a whole bunch. That's up near resistance that maybe then, premiums are jacked now where you can sell a call spread. So, I mean, even look at SPX, but it makes me think with something like this to take a look at tomorrow, are things jacked above 4,500? How far away can we get? Now you got the overnight risk. Could something crazy happen? Or will they evaporate? But 45, 40, 45, 45. How far away is that? $45. Damn. What do you think about that, McGraw? 45.50 isn't much. 45 by 60. But I mean, look, we look at probabilities and pictures. So is this going to be able to rally up there? Obviously, nobody knows, but we look at this and look at this congestion and look at what's in between. I say no. I say not in a million years. Well, we'll see how it plays out. All right, let me keep going here. YM been the weaker, head and shoulders top forming here, a little push up into here. All right. So, yeah. Still weak, garbage. All right. Retracement into this here. Who the hell wants to go long something that looks like this? That's why I say short covering, overreaction to news. They're going to come back for it maybe tomorrow, even if it hangs up here. Maybe tomorrow's when Dan calls a bull sandwich, and it's just toboggan slide down tomorrow. And so Bitcoin nailed yesterday. Getting closer to the support. Nothing good going on here. Oil stabilizing. Silver up at resistance now. It's going to stall. Gold looking great, even though it's up a few days. It's up. It got rejected above the pivot. That's normal, but holding back up again, that's bullish price action. So that looks good. VIX, where are you? Nothing much to read from there. And transports we looked at. Wow. Okay. That looks pretty bad. Dollar is going up, and look at that. You know what? When I see something like this, it's relentlessly going up, and we're all thinking, oh, it's going to be half a point. Maybe it's going to be worse. Maybe it's going to be more than half a point, because they're so far behind that maybe they have to do something drastic, which obviously will cause a nasty drop, but it'll probably be a buying opportunity, because if they go so far, then, the expectations become, well, maybe they won't do nothing the next time, but, let's give it a big dose of the medicine right now, but we'll just have to see. 5-year coming in a little bit, So there you have it. We'll see how this all plays out here today and take it from there. To you, Dan.
Good morning. Yeah, I, from a fundamental perspective, I'm shocked of this rally. It's like we have record or 40-year high inflation, CPI worse than expected from an already horrible number. And the market takes off like a bandit. I don't get it. They were even, the people on television were even having a hard time. They were Stephanie Pomboy, who's macro maven, the woman, smart gal. They were asking her, Maria was asking her, she's like, I don't know, maybe, she started talking about maybe the spread between CPI and PPI. They think they can make more money from it or something, some explanation like that, but whatever, we'll trade the charts. All right. So we don't have many earnings yet. They kick off tomorrow with some banks. Our opens, we entered a couple of shorts yesterday. So these gaps, some are call spreads, some are shorts. And we'll just take them one by one as they open. Let's see what I have over here. UNP. I've been watching a number of these transports. We actually sold a put spread on FedEx and IYT. This was in the weekend letter. This was Monday, so over Friday's high. That was a put spread idea. Bunch of Climos, which is tomorrow's subject in MT Live. My alarm went off here, so we'll keep an eye on that. UNP, this AT&T, I read in the paper today, it said it was up over 7% based on its, they spun off some media company to Discovery. But I can't trade this thing because I don't know what's going on without a pattern. I wish they would have equalized this, and then it would have been a nice gap breakout of a bottoming pattern, but I don't know what to do with that unless it's just a day trade. Wheat, I like this little gap breakout. Looks like a month and a half consolidation. Wheat. Hey, do you remember? This was one we remember I was watching a call spread on this Climo. In fact, I think I put this in the Climo thing for tomorrow because the out of the money $18 calls were just off the charts, crazy high. But now it's rested. It's burned off that over. It's pulled in, went sideways. 20 MA's flat, capping up over the entry. That looks good. Put that in the window. No, McGraw. McGraw, you're singing to the choir, my friend. I've made specialty seminars on trading news, but you are absolutely correct. And I caveated my sentence with, it was worse than expected. So you're right. I mean, the only explanation could be the worse than expected was not as worse as expected, so I totally get that. And you're right. So I am agreeing with you. It's like when somebody comes out and says, oh, I reported a loss of $3 a share and the stock rallies. Well, why is that? Well, because we thought you were going to report $3.80 loss a share. That's why. Well, John, your concept of bad news is good news for the market definitely has its place, because that's related to bad news means, the Fed's going to do so forth, which is cocaine to me, which I like, even though under the hood, bad news really is bad news. So I agree with that statement also, but I don't see how that translates here. No, I think the cocaine party's over. I do. It lasted 2 years post-corona. And there's pops in the bubble. I mean, look at the stay-at-home stocks have gotten decimated. Greg just showed you transports, yields rising, recession, housing in the tank with rising rates, economy slowing, inflation through well, since we're talking about sayings here, I'll throw another one at McGraw and John Sanchez. Here's another one of those slogans, right? It's the cleanest, it's the least dirty rag in a pile of rags. I'm paraphrasing it, but you know what I'm saying. And so if money's going to keep flowing here because we're the best of the dogs, then liquidity is supporting the market. So I understand that concept also. It's HPE I had as a sell setup, up and down. We'll watch that in the morning. Cisco got a downgrade. That is a ugly closing breakdown on Cisco. Now, even though it's on horizontal support here, the fact that you got all of these inside bars, topping tail, closing breakdown last week, lower low, lower high, I think it's going to slice through that like butter. And then it looks like it's going down to this next area. And do you remember Cisco used to be kind of almost a NASDAQ general? When we had, in the old days, the NASDAQ generals were Microsoft, Intel was a beast, Cisco, Dell Computer. Do y'all remember those before Google, Netflix, Tesla, Facebook, Amazon? Well, Amazon was there, but Amazon was a dog. It was a dog bookstore that was $10. So yeah, this used to be a general, and that's getting whacked. Vimeo, I think they said, I don't know if it was earnings or some other news, but nothing great there. Wood, the reason I'm looking at wood is because the journal said the lumber futures fell 7% overnight. And I don't have futures, so I said, all right, let me look at the ETF. And I don't see much going on there. Donut. Donuts got a downgrade, big old trading range. This almost kind of looks like Cisco a little bit. Bearish consolidation. Has more horizontal weekly support, but 30-minute low. That looks like a short. Stilled, my alarm just went off. That's a long over yesterday's high. Starbucks downgrade. I really thought this gap breakout was the start of a bottoming process. And that turned out to be, actually, we call this pattern a bear island reversal. That's 4 bars out there all by their lonesome with gaps. So that's a bearish pattern, which is also an upside shakeout. But 30-minute low, that's a good day trade short. QSR gapping down, but no pattern. I forget if this got an upgrade or downgrade. DPZ, I think upgrade, but no pattern. So it's on a downtrend. Now, you know, we talk about bottoming patterns in MT Live. Well, we talk about everything in MT Live. We've been doing them over 4 years now. And do you remember one of the key concepts we talk about is we need a something pattern bar. Otherwise, this is a consolidation and a downtrend. So as of right now, there are zero, well, I can't say zero, but very little signs of this bottoming. The only thing, the reason I said, well, it's not zero, is because this made a new low and snapped right back, and the 20 MA is flattening. So it's a potential one, but there's no shock whatsoever to suggest getting long this thing yet. KMX, oh, this one was earnings, so 98. All right, so this is bearish price action. Maybe McGraw, maybe a call spread in that. I'll put that in a window over here. ACI had earnings. There were not many earnings. That's gapping down. 33. That's an ugly gap. 30-minute low, maybe. RLX gapping up. So this is a long idea. Deep retracement, getting its sea legs back at a higher low. Again, it's a gap breakout. So that's worth watching. I'll put that here. RLX. ANTM. You know, when it has 4 decimal places, then that's telling me it's an over-the-counter stock. Gap breakout, way the heck up here, though. You know, it could be a toy bottoming. Look at this thing. Remember yesterday, LaRue was on my gap list? And I remember saying yesterday morning, I said, percent-wise, that's a big old gap. But look, it had bullish pre-market. And I remember saying here in the green room, because I had it in a window, I said 30-minute high, it looks higher. My gosh, I did not predict that. It was extended here and then it doubled in an hour and a half. That's crazy move. Hey, in fact, you know, that's tomorrow's subject, right? Climo. Power, Greg mentioned, maybe yesterday's high, still Wolf. Wolf is on our list. It's a 1, 2, 3. It's already posted. Gapping up to the high, looks great. A newer, wow, look at the tick. Over 1,400. Man, that's a big tick. All right, so Wolf 5-minute high is good to go. Same stop as yesterday. All right, that RLX is coming in. FedEx didn't gap up as much as I thought. Our IYT looks fine. Home builders are getting a little bounce here. Hey, the spider call spread, despite the big old gap against us, we're still over 50% of max profit. Nice. That, yeah, I had that purposely loaded at the open here to see how, to see its price. Let's check our FedEx too. FedEx, we should be back in profitable territory. We had the 197. Spready little guy here. Wow, 53 by 109. The midpoint is 48. So we're still profitable. Hey, that wheat is moving. IWM's the only horseman above its open. Qs and spiders are bullish gaps over that end of day base on the 15. Diamonds are the weakest. That's the one that we bought puts on. We bought, we're long puts on that. So that's FedEx, IYT.